Hi everyone and welcome to my video on insurance contracts. I am Rebecca, your insurance lady, and in this video I'm going to go over what is needed in order to have a legal binding contract between the insured and the insurer, the elements of a contract, and the doctrine of adhesion. So for this video, my goal is to help you to understand insurance contracts a little better. So let's get started. So I found this definition of a contract in the Business Dictionary online, and I feel like it gives the best explanation. So what is a contract? A voluntary, deliberate, and legally binding agreement between two or more parties. So basically, an insurance contract is an agreement, right? That's a contract. There are different ways to agree with another party. You can agree in writing, you can verbally agree, which makes the agreement spoken, and an agreement can be implied. An implied agreement is a contract based on an assumption. And it sounds funny, but an implied agreement or contract can be a legal binding contract, even though it is not written or spoken. So to give you an example, let's just say that your neighbor comes over to your house to help you clean your house every Sunday. And every Sunday for 3 months, you have paid your neighbor for helping you clean the house. Then on one Sunday, you decide not to pay your neighbor for helping you clean. This could be understood that even though you did not have a written contract or not even a verbal contract, it's implied that you have an agreement to pay your neighbor based on prior behaviors. So contracts can be written, spoken, or implied. Okay, so for the elements of a contract, I like to use the acronym CALA to remember the major elements that a contract must have in order for a policy to be enforceable or for a contract to be enforceable. You have to have a consideration, you have to have an offer and an acceptance, and there has to be a legal purpose. The contract must have all of these elements, otherwise it will not hold up in the court of law. So the offer is actually the first element of a valid contract. The reason that you have the acronym CALA is to remember all the elements, but the offer should come first. The offer consists of the arrangement being made. After the offer is exposed, then there must be an acceptance from the other party. And then once there is an acceptance, you are on your way to having an enforceable contract as long as both parties agree. An offer can be a customer completing and signing an application for insurance. The underwriter would need to accept the offer, and then as long as there is an agreement, there's a contract. The consideration portion of it is an exchange of something of value. So we will provide insurance coverage as long as you pay your insurance premium. Two values being exchanged, or I will pay for my insurance premium in exchange for coverage. The other element is the legal purpose or the legal capacity. So minors who are under the age of 18 have no legal capacity to enter into a contract. A person who is clearly under the influence of drugs or alcohol or making irrational decisions or expressing irrational behaviors are not operating in its legal capacity. So what happens if you sold someone a policy and they were able to prove that at the time the policy was issued, they were not in their right state of mind due to a certain health issue? If those major elements of a contract are not followed, then the contract would not be enforceable. Now, this is why these 4 elements are so important for insurance contracts. So next I'm going to talk with you about talk to you about the contract of adhesion. So when you think or you hear the word adhesion, you probably are thinking of adhesives or tape, something that sticks. Well, it sounds funny, but that's a good way of remembering a contract of adhesion. Since insurance policies are not drawn up through negotiations and an insured has little to say about any of its provisions, in other words, the contract is offered on a take it or leave it basis by the insurer, then it has to stick, right? Have you ever gotten a gym membership and you sit down with the sales rep and you sign the contract? You don't negotiate it, you just sign it and join. That's a contract of adhesion. If you want it, you must adhere to the terms of the contract. If you don't like the terms, don't purchase the policy. That's as clear as I can make it. Insurance contracts are contracts of adhesion. So since insurance contracts are contracts of adhesion, then the doctrine of adhesion applies. So the doctrine of adhesion states that if the insurance contract is vague or unclear, any ambiguity will be construed in favor of the insured. So if the terms and conditions are unclear or very broad, then the doctrine of adhesion has the insured's best interest in mind, the customer's best interest in mind. So I do hope this helped you. I do want to thank you for viewing this video. Remember to hit like and subscribe because I have more videos that I'm working on. I also have a couple longer ones on my webpage. If you like my teaching style, please support my page. Feel free to send me an email and let me know what you'd like me to cover. And for those of you out there that are looking for affordable study material, I'm partnered with Kaplan Financial Education. Use the link below. Get a discount on any of their products. They have full-on courses that will help you pass your exam. They have books. There's a test bank. You can purchase those things separately if you want, or you can purchase them in a package and you get a 10% off their regular price. So click on the link, select your state, and review the products. Thank you so much for watching my video. Again, I am Rebecca, and I am your insurance lady.